Well, it's 11:30, so let's start sharp at what we had decided. I would like to request Isha, who is the director for Mumbai for Together Investing Club, to go ahead and invite the speakers for today. Isha, are you on call?
Yeah, hi.
Great. So over to you, Isha. Please go ahead and introduce our speakers for today. We're going to present the model portfolio January 2021, which is powered by the Together Investing Club. So Karan and Sahil, who are members of 0006 and 0003, which are the clubs launched, in the third month and the sixth month of Together Investing Club consecutively have are presenting. So over to Isha to go ahead and just introduce us to who the speakers are for today. Isha, to you.
Yeah. So good morning, everyone. I am Isha Upadhyay, Director Mumbai. Today, I feel a sense of immense pride as the speakers for today's presentation are none other than our own club members. They are young, sharp, and enthusiastic. Today, we all will witness their journey with Together Investing Club when the knowledge and guidance imparted to them by our mentors it is put to practice. I hereby welcome Karan Raghuvanshi, who is a member of Club 0006, is currently in the final year of Computer Science Engineering. He is also the founder and CEO of Investro, his family office firm. Also, he is running his family's business of real estate. He also proudly adds that he would continue being in the field of investment and take it up as a profession. Welcome, Karan.
Thank you, Isha.
Isha, you're on mute.
Now, let me introduce you all to Sahil Nangal, who is our second speaker, who is a member of Club 0003. He is a BCom graduate and currently a CFA Level 2 candidate. He also aspires to become an equity analyst. Hi, Sahil.
Hi, Isha.
Yeah, back to you, Emmanuel.
Thank you, Isha, for a wonderful introduction there. So we have Karan and Sahil presenting the model portfolio today. So we have a couple of disclaimers to make before we go ahead and venture into, or before we go ahead and dive into the portfolio. I would like to request the co-host to please manage people who are joining in, please, so that we can have a flawless meeting as it goes. Thank you. So the disclaimers of today's presentation are very simple and very easy to understand. So everything we discuss today is for educational and knowledge sharing purposes only. We're not trying to recommend any stocks, or we're not trying to craft any portfolio for investing purpose. It's knowledge and education purposes only. The information, content posted, stocks discussed, reviewed during this presentation, it may or may not be suitable for all investor classes. So it must not be taken without self-analysis for sure. The information should not be reproduced or redistributed or passed around. It is for your observation and your feed your knowledge base as well. The model portfolio is for sole presentation purpose, and we're not recommending any stocks to buy, hold, or sell in the current presentation. So I would like to go ahead and give this forum over to Karan and Sahil from now on for the next 45 to 50 minutes. It's your platform, guys. We would like to start with trying to understand of how exactly your investing journey has been so far with the Together Investing Club. So over to you, Sahil.
Yeah. Good morning, everyone. My journey with TIC has been amazing. Earlier, I was just a CFA student with a lot of theoretical knowledge about the markets and financial instruments. What exactly excited me was stocks while studying, but I had lost a lot of capital while trading, mainly because of uninformed decision making and impatience. And that is when I lost my confidence, even though I was studying a finance profession, but still I lost a confidence, and I was reluctant to take any risk in the market. But when one day I got a call from Emmanuel sir, and he told me that about the investment club, and I said, okay, well, I'm okay with it. Let's go ahead. And after that, everything changed. After starting with the club, I learned how things work in the real world and how I can leverage my knowledge and start my journey in the stock market. I have been investing in trading since August when I finished the training, the whole training. And since then, I've been investing in trading. And the kind of hand holding I've got is indescribable by Atul sir and Emmanuel sir. Anything, any decision I have to make, I talk to them before making any decision. And so far, everything has been great and everything has been profitable. And the best thing is that the people in the club, they are very helpful. And people coming from any background can join the club and end up being an investor, informed investor. So my journey has been great. This is the thing that was a cherry on top for the 2020 year, because it was a difficult year for everyone. But TIC made it a great year for me. Thank you.
Thank you, Sahil, for amazing words there. Over to Karan, and not just words, but actions. Like we say, action speaks louder than words. Karan is here to demonstrate something that he has achieved, or that he has probably executed through TIC, or after he's been a member at TIC. So, Karan, over to you. And the floor stands still. I would not be interrupting you guys again. So, over to you, Karan.
Thank you, Emmanuel. I'll start by talking about my investing journey and my experience at TIC so far. So I started my investing journey in May 2020, when the markets had only started recovering from the COVID-19 crash. I always wanted to be an investor, but didn't know how to become one. So I started watching YouTube videos and found out that stock market would be good, as almost all the stocks were trading at 50% discount. I made a good amount of almost 1.5 lakh and thought that I had mastered the art of investing, but only to lose it all, and even more by trading stock options. I lost almost 1/3 of my capital and was ready to leave the market once and for all. My best friend, who knew someone at TIC, recommended that I join it. So after a short Zoom call with Emmanuel sir, I was convinced that this could be something that could be life-changing for me, and so it was. Next slide, please. Today, I stand at almost 24% in profits in just 2 months, purely by applying the principles of investing taught to me at Together Investing Club. I'm yet to recover the amount that I lost trading options, but I'm optimistic that it isn't going to take too long. I started this portfolio on 5th November. In this portfolio, I'm currently holding 39 stocks. These stocks at that time fell into the criteria that were taught to us, and are a combination of banking, NBFCs, insurance, value stocks, growth stocks, and ideas. Most of these stocks are still a part of our modern portfolio, which we'll be presenting now. Also, I have no problem in admitting that trading never was and never will be my piece of cake. Sorry, Atul sir.
That's perfectly fine.
So in this portfolio, most of these stocks are still a part. For example, banking and finance. Banking and finance was and will always be almost the same for each and every portfolio that I and everyone at TIC makes, because it holds 33% weightage in Nifty 50 and 33% in Nifty 500 as well. The best stock out of these that gave me the most returns was Tata Chemicals, which almost doubled in 2 months. I booked profit in some of those stocks, and the current profit stands at 4 lakh rupees. Over to Sahil. Thank you.
Next slide, sir. So this is a disclaimer for model portfolio. As we are all aware that currently the markets are overvalued and the portfolio we made is on best effort basis. The portfolio we are about to present is of high beta portfolio. The composition of the portfolio is to ensure rational capital allocation to all the stocks. It is a multi-cap portfolio consisting of large caps, mid cap, and small cap stocks. Major importance is given to the investment theme and not the individual scripts. All companies in the portfolio are above INR 500 crore market cap, and any company under this market cap is not being considered. Various investment ideas are brought together in synergy to craft this portfolio. Hence, position in individual scripts should be avoided. We are all keeping 27% cash in hand to be deployed as and when the opportunity comes in the future. So This is a model portfolio that we could come up with today's in the current market scenario when the markets are overvalued and the earnings are low and the markets are trading at their highest levels. We have come up with a investing scheme which consists of value investing, growth investing, banking sector, financial services sector, idea, and we have also kept some amount of cash in hand for deployment in the future when and if opportunity arrives. Next slide, please. Let's start with our model portfolio. We are going to start with value stocks. These stocks were really hard to find at the time when Nifty is trading at its highest level, as I mentioned earlier. But by qualitative and quantitative analysis, we were able to find such 4 stocks which meet our criteria above all and are quality stocks as well. Let's start with Castrol India, the first stock. Castrol India is a mid-cap company operating in petrochemical sector. It is also the market leader in oil and lubricants and is also moving slowly into the fluids segments for electric vehicles. We have allocated 1% of our capital to the stock because there is a lack of investor confidence in the stock. But we believe that in future, when the confidence resumes and the scenario is better for the stock, we can deploy more capital to the stock because the company is also working on developing transmission fluids, coolants, and greases for electric vehicles. It is already looking into diversifying its business avenues and plans to focus on maintaining its own market share. So it has a good outlook. We can increase our share in the stock in the future. Secondly, comes Industars. Industars is a large cap company operating in telecommunication sector. Industars is currently the most undervalued stock in Nifty 50 that we could find and has a good command over towers and communication services. We have allocated 3% of our capital to this stock because the company is looking forward to the infrastructure expenditure deployed by the government, and it is going to help setting up towers and communication services in rural areas, gram panchayats, with the focus of digital India in mind. It is providing, the company is also providing towers and related infrastructures and manages telecom towers and communications across various mobile operators. In the last 2 years only, the demand for wireless broadband services has is intensifying in the coming years, driven by availability of affordable handsets. So next up is KEI Industries. KEI Industries is a mid-cap company operating in the cable sectors. It has developed capabilities to manufacture a wide range of cables in cables like low voltage, high voltage, and extra high voltage cables, along with house wires, instrumentation, control cables. We have allocated 3% of our capital to this stock because the company has a track record of over 5 decades of operations in cable industries. This has enabled it to establish strong relationship with reputed customers like Power Grid Corporation of India, L&T Limited, and Tata Power Limited. Next is VST Industries. VST Industries incorporated in the year 1930. It is a mid-cap company operating in the tobacco sector. It is also the undervalued competitor of ITC and Godfrey Phillips. It is backed by the presence of over 80 years and is established player in the cigarette industries. It is also the third largest player in Indian cigarette market. We have allocated 3% of our capital because of its strong brand loyalty and adequate pricing power, which will continue to support the business's profile in the medium and long term. Now let's see the growth stocks. These stocks are the stocks which have shown significant growth in the last few years. The revenue has been growing year on year and so have the earnings. And we believe in the upcoming years, the price will also reflect this growth. The first stock is Bajaj Auto. Bajaj Auto is a large cap company and operating in the auto sector. It is the first company that has hit market cap of 1 lakh crores in the two-wheeler automobile sector. It has a strong business profile, established market position with market leading products, and is a rising consumer preference for personal mobility, which will drive demand for the two-wheeler segment. We have allocated 3% of our capital to this stock because despite the blip in this year, 2020, we believe that in the longer run, the sports and super sports segments will grow. Urban India under 40 generation that has a wallet size will want to own bikes more than cars. which have power, speed, and best-in-class looks. And Bajaj Auto comes up with that. Secondly, the second stock is Kaplan Point Laboratories. Kaplan Point Laboratories is a small cap company operating in pharmaceutical sector. It has a wide range of products and ointments, creams, and external application. Yes, and we have allocated 1.5% of the capital because it fit our criteria. It didn't fit all of our criteria, but it fit the major criteria which on which we judge the stock or a company. And we believe when the fundamentals change in the future and it comes under all our criteria, we will deploy more capital to the stock. Kaplan Point is also able to generate adequate revenue and cash flow to remain debt free with benchmark receivables, and it is also investing heavily in manufacturing facilities with their internal accruals. Next is Deepak Nitrate. Deepak Nitrate is a mid-cap company operating in chemical sector. It deals in basic chemicals, fines and specialty chemicals, performance products. We have allocated 1.5% again because of a lack of consumer confidence in the stock, and it didn't fit all of the criteria, but it qualified all major criteria which we see a stock on. And also Deepak Nitrate is favorably positioned to capture opportunities across chemicals and specialty chemicals landscape. As the operation cost of China, world's largest suppliers, increase due to focus on sustainable manufacturing in India, it will result in an increase in landed cost of chemicals. Improving the competitiveness of alternate suppliers, it will open up opportunities for established players such as Deepak Nitrate. Next is Heidelberg Cement. Heidelberg Cement is a mid-cap company operating in cement sector. Heidelberg Cement India Limited is a subsidiary of Heidelberg Cement Group, Germany. With the help of committed sales efforts supported by quality products, this company has carved a niche for its brand MyChem in new markets and has further improved its brand positioning in the existing ones. Hence, the capital allocation of 3%. Also, the National Infrastructure Pipeline project of rupees 102 trillion announced by the government is being projected as a key achieving vision of making India a $5 trillion economy by the year 2025. The pace of execution of infrastructure project holds a promise for the Indian cement industry. Next is Hero MotoCorp. Hero MotoCorp is a large cap company operating in auto sector. The company is India's largest motorcycle manufacturer and fourth largest scooter manufacturer. And the company is also backed by strong market appeal, wide distribution and service network, and considerable focus on growing rural markets. We have allocated 1.5% to reduce our exposure to automobile industry, and also Bajaj Auto has a wide range of products for example Pulsar, Triumph, and they're also coming up with new motorcycles. They are more diversified than Hero MotoCorp, hence we have reduced our capital allocation to Hero MotoCorp. Also, there could be a shift away from shared mobility to own mobility. This is likely to benefit two-wheeler demand in the short term and in the medium term. So we are expecting a crucial year this year, financial year 2022. So we could not ignore Hero MotoCorp. It fit all our criteria. It is a growth stock and it will keep growing. But the allocation, 1.5 allocation, we can increase in the future if it comes up with a new brand or the new products in the company. Next is Hindustan Unilever. It is a large cap company operating in FMCG sector. It is also one of the largest FMCG companies in India, as we all know. Hindustan Unilever is India's largest FMCG company with a heritage of over 80 years. More than 9 out of 10 Indian households use one of or more of their brand, and it feels good, looks good, and get more out of life, giving a unique opportunity to build a brighter future. We have allocated 3% of our capital because it has a high visibility and high sustained. They have sustained their leadership over decades, backed by extensive distribution network, advertising, marketing, and etc. It has also leveraging position with distributors, and they adapt to channel strategy and its products and market segments. Also, the introduction of GST has led to flexibility in their supply chain and benefited the company, and it is focused on unlocking value by redesigning their supply chain to create a demand localized network. So it is a good stock to invest in. And next up is ITC. ITC, I don't think I have to say much. It is a stock which I have noted that most mutual funds and investors and portfolio managers hold the stock heavily in their portfolios. It is a large cap company in the tobacco sector. There is some speculation around the stock, but I believe the long-term underperformance of the stock has increased the attractiveness from the valuation point of view. And we have seen this kind of cycle play out in the past, like in leading companies like HUL and Reliance. So I believe this stock will unlock its value in the near future. If not in near, but in 2-3 years or midterm, I would say the value will be unlocked. And we have allocated 3% of our capital to the stock. And next is Oracle Financial Services. It is the only company which is providing software services to financial services sector. Almost every sector like pharmaceutical, chemical, IT, banking, every sector is using its software. And we have allocated 3% of our capital to the stock because there is an increased demand for its second generation cloud services in the country, as more and more Indian organizations seek to drive a rapid return to growth because of much better price performance of the software and the experience of using the software from other technology providers. Next is Petronet LNG Limited. It is a large cap company operating in gas and petroleum sector. It controls nearly 60% of domestic LNG capacity. Petronet LNG, we have allocated 3% of our portfolio capital because as we know, we are moving towards green energy, renewable energy, and LNG terminals are considered sustainable and eco-friendly for our power, fertilizer, oil refineries, steel, and other crucial industries. It is recognized as a clean fuel for the world. And we believe that in the future, when the world is moving towards green energy, this company is going to perform a lot. This company is going to show a lot of growth in the future. So next is Polycab India. It is a mid-cap company in the consumer durable sector. The organized home wires and cable industry in India has a market size of around 56,000 crores, of which PL has a market share of 15%. And in the current year, fiscal year 2020, the industry is estimated to have grown 10% and is expected to grow at a healthy rate over the medium term. We have allocated 3% because even though barring the short-term impact of COVID-19 pandemic, the company's business profile will improve upon resumption of economic normalcy in the country, driven by company's market leadership position and infrastructure expenditure by the country into and bringing Digital India project to rural states and connecting the whole of India. This is the only company, the largest company providing cable services, cables and wires across India. So this is going to perform a lot, and this is going to show a lot of growth in the future. So lastly, Tech Mahindra. Tech Mahindra is a large cap company, we all know, and it is operating in IT software sector. It is I don't know. I don't think I have to say much. We all know about Tech Mahindra. We have allocated 3% of our capital to the company because the company is betting big on emerging technologies like 5G, which is going to help the whole sector when it becomes operational. It is also into blockchain, artificial intelligence, and quantum computing, which is the future. We are going to see a lot of growth in the next decade. Till 2030, IT sector is going to be the outperformer again, and it will continue to focus on strategic acquisitions. The future of innovation also depends on the successful rollout of 5G. So we are quite positive that when 5G is rolled out and establish their feet in the Indian economy, this company is going to perform great. Thank you. And over to Karan to discuss banking and financial sectors.
Thank you, Sahil. So all the companies that were mentioned in growth and value cannot be run without the financial sector. Banking and finance, as I said, hold almost 33% in Nifty and Nifty 50 and Nifty 500. So by taking the same approach forward, we decided to keep 1/3 of our portfolio for banking and finance. For banking, there is no such right way to analyze all the banks. So by keeping in mind the market capitalization, we decided to go with the top 5 banks from top to bottom. Out of those, from the private sector are HDFC Bank, ICICI Bank, Kotak Mahindra Bank, and Axis Bank. These are the top 4 banks in the private sector, and SBI is the topmost bank in the public sector. Now, why top 5 banks? We chose the top 5 banks because they hold 45% of the total deposits in our country, and they also hold 46% of the total credits given out. Banking is banking is also the backbone of our economy, and we we have to choose the top 5 banks because they're performing the best. So we'll start with HDFC Bank. HDFC Bank is #1 bank in the private sector. It has the highest market cap of 8 lakh crore rupees. It has been the most consistent performer in the stock market with almost 25% CAGR since its IPO. That was 25 years back. It has the lowest NPA percentage and highest number of branches in private bank, which stand at above 5,000 branches. And it also has a very strong management. For the public bank, we chose SBI because it's the largest bank of India with 23% market share by assets and 25% share in loan and deposits. It holds almost 1/4 deposits of the whole country, and almost 1/4 of the credit advances of total advances are given by SBI. We gave 1.5% to SBI because it's a public bank, and we feel that the public sector is very uncertain in the future because government has decided to consolidate the number of public banks. Because of the regulatory affairs, the public sector won't be able to grow as fast as private bank. There are high chances of NBS, and the government intervention is also high. But I personally feel that in State Bank of India, it will emerge out as the best bank in the public sector, as it already is, and it won't have to leave its position. The third bank is Kotak Bank. Kotak Bank has the highest net interest margin. It has the highest CASA ratio, which is the current account saving account ratio, at 57%. It also has the best sales and net profit growth over the last 5 years at 20.6%. The fourth bank we chose was ICICI Bank. It has a very high retail loan book at 64%. Retail loan book is important because of the diversification. Because of the diversification, the risk is less, and the chance of NPAs is very low. ICICI Bank also has highest provision coverage ratio at 78%. It is one of the most dynamic banks of India, and it has always been the first bank to introduce new technologies in India. The last bank of this section is Axis Bank. It is the fourth largest bank by market cap, and we gave 1.5% to it because it's trading at high PE ratio, and also there is a lack of management confidence. And we feel in the future, if the management changes and the management, if the confidence in the management grows, we can increase our stake from 1.5 to at least 3. Next slide, please. For the financial services sector, we chose Bajaj Finance. We'll start with Bajaj Finance. It is a finance company with strong brand and customer base. Its AUM has grown 35% last year from year to year, and its profit has grown 36.9% year over year. It's the fastest penetrating NBFC in India in consumer and institutional lending as well. Under the same company name, we have Bajaj Finserv. It's a holding company whose profit has grown year over year at 44%. It holds stakes in Bajaj Finance, Bajaj Allianz Insurance, and Bajaj Allianz General Insurance. So because of all these companies, we feel that its profit is going to keep growing, and it's going to perform very well in the future. For our third company, we have HDFC. HDFC is a holding company, and it also has its separate business of housing finance. Because of the competition that has been falling consistently, like IL&FS crisis and the defaults that were done by DHFL, we feel that its position in the market is going to keep growing. Also, the government is focusing on housing for all schemes like Pradhan Mantri Awas Yojana, because of which HDFC is going to benefit from. As I said, it's a holding company and it holds stakes in HDFC Bank, HDFC Life, HDFC AMC, and many more companies under the brand name of HDFC. Because of all these companies, the total value of HDFC stands at 5 lakh crore rupees. So I feel that this is going to be a very good play in the NBFC sector. Again, we have another company under the brand name of HDFC. Because of the strong brand name, HDFC AMC has a large number of unique folios, that is 2.25 crore. Because I feel passive investing is not easy and it's not going to come anytime soon in India. And even if it comes anytime soon in India, HDFC AMC is coming up with index ETFs and many more index ETFs and many more ETFs that have passive investing. And only 2% of people in India are currently invested in mutual funds, which has to grow anyhow. The next company we have is HDFC Life. HDFC Life has the best growth in the insurance sector. It showed 9% growth versus minus 8% growth in the industry. It's expecting to grow 17 to 20% in the future. And also because of the brand name of HDFC, it's going to be it's going to be the best play in insurance sector. Next, we have SBI Cards. SBI Cards is the American Express of India. It's the only separately listed player in the credit card segment. It's number 2 in the market after HDFC Bank. Its future is very positive as financial literacy and income slabs are going to increase. The market for credit card is going to grow. I personally use SBI Cards, and I've seen that it has a very low eligibility criteria, because of which it's going to penetrate into rural areas as well. And also its potential customers will come from SBI, which is the largest bank of India. Now we have ICICI Securities. Previous slide, please. Now we have ICICI Securities. It's the top listed broking company in India. It has a very good brand name. It benefited from COVID-19 because the number of retail investors grew significantly in the lockdown. And because it's associated with ICICI, it has a safety. It has this kind of safety as of which if something goes wrong, ICICI Bank will have its back. We now have ICICI Prudential and ICICI Securities. ICICI Prudential is a traditional. It's the most aggressive company in terms of sales marketing. We've given it 1.5% because we've given 1.5% as well to ICICI Lombard, which is almost the same sector, and we've also given 3% to HDFC Life. Insurance in itself is a very good sector, which is bound to grow as the income slabs increase. ICICI Lombard is the only private listed GI company. The general insurance sector grew from 15% to 55% from 2004 to 2020 in the private sector. So we see that the general insurance sector is leaning towards the privately listed general insurance company, which is ICICI Lombard. Next slide, please. Now we come to our idea stocks. We've only given 1% each to each stock because these stocks didn't fall under growth or value investing, but we didn't want to miss out on the opportunity to invest in these stocks because these are very good companies which have clean balance sheets and a very good market share in their own sectors. So we'll start with Asian Paints. Asian Paint. I feel Asian Paints doesn't need any introduction. It's the #1 company in the paint industry. It's the only company in the world whose revenue has increased 20% for the past 6 decades. It its business has almost doubled every 3 years. It's shown a 23% CAGR, and it's the only company in the whole world who gets 97% of the MRP of the product. It's a very clean company and it has a very good balance sheet. And Asian Paints is one of the best companies to invest. Now we have Dr. Lal Path Labs. Dr. Lal Path Lab is the only listed path lab with a very huge penetration. As insurance grows, lab testing will have to grow. It's now a part of consumer behavior to get oneself tested without a doctor's prescription. In the COVID phase, it showed the highest rate of RT-PCR tests as well. The third company is IRCTC. IRCTC is a monopoly in its sector. It has no competitor, and a lot is changing in the industry. But even after privatization, it's going to stay profitable because any ticket to be booked will be booked through IRCTC, and even the catering is going to be done through IRCTC. The fourth company we have is Titan Industries. Titan Industries is the largest player in the jewelry industry. It has the highest number of stores in India. It has very good buyback policies and investor trust has been unmatched. There has been slight decrease in jewelry consumption in the past year, but as we all know, India loves to invest in jewelry. So I feel that this is going to keep growing in the future. Last but not the least is Pidilite. Pidilite doesn't need any introduction. We all know about Fevicol. It is a wonderful business, and it is a monopoly in its own sector. And if there was a choice, I would have given more allocation to it, but currently it's not falling into value or growth. But if it again falls into value or growth, we can increase the allocation from 1% to even 3%. Thank you.
So this is the portfolio we came up with, me and Karan together, and it consists of 34 stocks, five stocks in banking sector, 9 stocks in financial services sector, 4 stocks in value investing, and 11 stocks in growth, and 5 stocks in idea or speculation. Again, please don't buy any stock individually, because there is a reason they are combined together and made it into a portfolio, because not one stock is going to give you that much of a return than a portfolio can give. And again, I would like to go back to the disclaimer. This is only for educational purpose. We are not recommending any stocks or portfolio. Please do your own analysis before investing. And in the current scenario, when the market conditions and current scenario, this is the portfolio. This is the best portfolio we can come up with. It is not the best portfolio in the Indian market, but right now, this is the best we could come up with. Thank you.
Great. Thank you so much, Karan and Sahil. So, guys, this is the portfolio. There are 34 stocks, and most of them are very good companies. But as like Sahil has been, reiterating again and again, this is the this is the probably the closest to an ideal portfolio we could have made in this condition that we are in of today, where the earnings are very low but the valuations are very swollen. So now going ahead, we can move to the questions and answers. We're open to any questions that any of you have. You can go ahead and just type in the questions in the chat box, or you can go ahead and unmute yourself and ask the questions. Sahil, me, Karan, we are here to answer any questions that you have regarding any of these stocks or regarding the portfolio overall. So over to you guys for any questions that you might have. And especially looking at a lot of questions from TIC members, because I'm sure there are a lot of stocks in this list, and there are a lot of stocks that are also not in this list. So if there is a stock that is in your portfolio but not a part of this list, you can also ask us about that, because sometimes it doesn't feel good. But trust me, we've tried to accommodate as many as possible. It was an elimination based portfolio. We've eliminated a lot of stocks, and we're left with stocks that we could not eliminate. So if you have any questions regarding all these stocks, any of these stocks, or any questions regarding a specific company that's not there in this list, we're okay with that. So I have a question in the chat box already. How about IDFC First Bank? So Karan, did we go through IDFC first? Any answers on that?
Yes, we went through IDFC First Bank, but because its market cap is not as high as the top 5 bank, we could not accommodate it in this current portfolio. But I personally have it in my portfolio because it's very good for long-term purposes. Just yesterday, it announced that it's going into the credit card segment, and it's providing 9% as compared to 40% interest rate that's going to be charged when the payment is overdue. So I feel it can be the next ICICI Bank of India, and because we could not accommodate it in this portfolio, I can recommend that it can be a very good play in the future.
Great. So Jayesh, IDFC is already a part of Karan's old portfolio that was created in November, and the buying average is around 32 rupees and 15 paisa. So I'm sure it's right now trading above the price, and it is a good bank. It's just that we could not accommodate it in the modern portfolio that we've built. Thank you, Karan, for answering that question. The second question is from Dipanshu. What about the defense sector? What is your view on that? So if I'm not wrong, I'm sure, Dipanshu, because it's an elimination based portfolio, we would have scanned through the defense sector as well, but probably they have not qualified as a value or growth. But I'll let Sahil and Karan answer the question. So guys, why is there no defense stock in the portfolio? Any reason? Karan, Sahil?
Sahil, do you want to take up that question?
No, there is no specific reason. We were trying to create a portfolio with minimum number of stocks, and because when we are allocating our capital, we are trying to achieve diversification so that we don't have an exposure to a single sector. Defense stock is a good bet, but here we are trying to create trying to earn a greater return. And defensive stock, I don't think. Me personally, I don't think it will going to benefit in this model portfolio. Otherwise, yes, in a good scenario, when Indian markets are operating in a normal scenario, I would take a defense stock, but not in this model portfolio.
Thank you, Sahil. So Dipanshu, to answer your question, I guess there was no defense stock that could qualify the parameters that Karan and Sahil chose, and hence they're not on the list. I'm so sorry. But apart from that, I think defense has never been that bullish as an industry. It's heavily regulated. The prices are always, on the bottom. The margins are always on the bottommost slab. So as a shareholder, investing in defense sector is, unless you're a promoter, investing in defense sector has not been rewarding for any of the investors globally. So I don't know if we should stick to that. Another question from Mr. Virender Upadhyay, sir. He's asking, for the last a couple of months or so, I think Kotak Bank shares have been falling. I don't know if that's true, because according to me, the shares are not that deep. Other banks are growing. So should we still have the bank in our portfolio?
So you're on mute.
Sorry. So that's what Virender sir is asking. So guys, over to you. So are we looking at any problem with Kotak? The stock is falling. So anything there?
As we know that it's even if I don't know if the stock is really falling, but even if it's falling, we can't eliminate it because it's growing at a very good pace and its financials have been very strong. And uh, even if it's falling, I think you should buy it if the price is uh, trading at a discounted rate.
Okay, so Virender sir, what Karan is trying to say is that it's a big bank and it's a major part of the entire ecosystem. So we are not doing technical analysis. We're not trying to figure out the right price to enter. All these stocks, we've created a dummy portfolio on Excel and we'll be sharing that with everyone. It will be a view only link. You can just click on the link and you can see the portfolio today onwards. Whenever you want to open and the prices will be shown. So on Friday closing basis, we have taken a buying in all these stocks. And we've not seen technically whether it makes a buy or a sell or a hold. Fundamentally, or just for this for a portfolio, we've bought them. So we've not actually tried to time an investment in them. That is what Karan is trying to say, because the bank is too big enough, we cannot avoid it not having in the portfolio. Well, another exciting and interesting question. Probably I did notice it. But Rajesh Sharma sir is asking, there is no Tata Group share in the portfolio, any reason? So first is only Titan is there in Tata. I think the Tata Group company, only Titan is here. That is also 1% allocation in an idea or speculation space. But why is there no Tata Group share, Sahil?
It is trading at a high premium right now. There is no benefit in investing it right now, and also uh, it is not. It has not shown that sales growth or stability in the last few years. So we have not taken it.
I want to add that I have TCS in my portfolio. It was uh, it was in the growth sector when I started investing in it, but it's right now trading at a very high premium. That's why we had to eliminate it from our portfolio. But if the TCS falls again and the PE ratio comes to falls into our criteria, we can add it again.
Great. So Karan, what Karan is trying to say is TCS is a growth company, but as of now, it's beyond the parameters of us naming it growth. So it's slightly overvalued for us to get into. But the moment it's back, we will be going through. And also, like a lot of industry veterans say, Tata is not a shareholder-friendly group. It has not rewarded most of the shareholders most of the times. So please don't be surprised if you don't see Tata in our further model portfolios as well, because we're trying to do such model portfolios every quarter here on. So the idea is very specific that if a company does not satisfy our benchmarks, we're not going to put it here just because of the name. And for before anyone asks me, Reliance is also not a part of this list. And apologies to anyone who has been hurt because of that. But trust me, it does not qualify the parameters that we have taken as a portfolio. Well, moving to our next question. Anshika is asking, Wipro is also an undervalued stock. Why isn't it in the list as per value analysis? So Sahil, why isn't Wipro here? Is it a value stock as of now?
It was a value stock, but not right now. And also, we have also eliminated this year's some parameters because of the Black Swan event which happened, COVID-19. It is not going to repeat. As soon as this companies like Sir said, TCS, Wipro, they were not falling into our criteria. Wipro is also not currently falling into our criteria. As soon as it gets back, fundamentally, we can include it. But so far, as of now, it is not in our list.
Great. So Anshika, you're also a part of the Together Investing Club. You can connect with Sahil offline. What I understand is that the parameters that you're using for rate and growth are different as compared to the rate and growth that Sahil has used.
Yeah.
I think that is why you're in your calculations, probably Wipro would come out as value, and in Sahil's calculation, it would not, because Sahil has tweaked the rate and growth as per the current scenarios, as per the post-COVID scenarios. He has done a lot of research to be able to tweak those ratios. So Anshika, please connect with Sahil post this seminar, and I think he'll be able to help you there.
The same question goes for coal India also.
Oh yeah, that's a good question, Sahil. So why not Coal India? I'm sure according to your ratios, also Coal India would be undervalued, but I'm sure other parameters would not be satisfactory. So Sahil, over to you.
Yeah, Coal India was also undervalued, but as soon as we change the return requirements and growth prospects, it moves slightly into the overvalued region. And also, I was not very confident with the net income and sales they have achieved in the last few years. That is why we have not taken it right now.
So Anshika, to summarize what Sahil has told, it is not quantitatively defined. Coal India's elimination was on qualitative basis. Also because it's a PSU and heavily regulated, and we're at a current level where we do not already the stock, the portfolio is a very high beta portfolio. So we didn't want any stocks further, who are anchoring the non-profitability there. Thank you. Over to Okay, so there is a question from Sadanand. Any suggestions for pharma companies? I guess pharma as an index in itself is very overvalued as of now. But Sahil, do we have any pharma in the list?
Pharmaceuticals may we have Kaplan Point and Dr. Lal Pathlab, and I think that's it. These are the only good companies. Although pharma is going to grow in the next decade, pharma is going to grow. But as of right now, like we have said, Sir has also said, this in the current scenarios, these are the only stocks we could come up with, and these are the only stocks which are fitting our criteria. We can also change it, but it depends quarter on quarter. We will keep changing it quarterly, and we can see if in the next quarter any pharma company comes. There was like Cipla, and Cipla was earlier undervalued, but as soon as the economic activities resumed, it went overvalued. It is trading at a very high PE right now. So we have not taken much pharmaceutical exposure in our portfolio right now.
Great. So what we understand is pharma as of now is out of reach for value or growth investing. Hence, it's kept aside. Thank you. Bandhan Bank, Dipanshu. Yes, it's an amazing bank, but again, like Karan said, we could not accommodate enough. Like even if you see right now, around 45+% of this portfolio is banking and finance. So if we keep adding good stocks like Bandhan, like IDFC First, I think Karan would not be left with enough bandwidth in cash or to allocate to others. So we can create a okay. Can I request non-speakers to mute themselves? Thank you. So we can create a separate portfolio for banking and finance, but I think even in that we will not be able to accommodate Bandhan, Karan, right? Because we've already given a lot of weightage to banks. I don't know. I don't think Bandhan we could be accommodated here, especially because SBI has came back with bounce back from its lows, and the market capitalization is back to top 5 banks in India. So it's a good bank, but not for this portfolio, Dipanshu. Meenan is asking what's the status of Franklin Templeton. I'm assuming she's asking about the Franklin Templeton liquid fund, because that is the only case that I can think someone would ask me for. I'm just assuming. Meenal, if that's right, please put it in the chat box. We'll come back to your question. Great. Rajesh sir is asking, what about the infrastructure sectors in portfolio? Why even government is spending on sector? Well, Rajesh sir, like we've been talking, infrastructure is not for a retail investor to invest into, because it's very capital intensive, and the returns are a decade long investments. Returns are the break even is a decade long. So infrastructure is generally a sector where investors who are not looking for a return on investment or return on capital of 15% or 10% or 12% minimum that we look at should invest in. So for retail investors, infra is not a very good sector. But again, because it's not a part of this list, I'm assuming, Sahil, that no infrastructure sector could qualify into your parameters?
No, sir. Mostly because of their return.
Mostly because of the return on capital and return on equity, if I'm not wrong.
Not providing.
Yeah. So Rajesh sir, infrastructure sectors are not getting through. Yeah, Karan, please go ahead.
We've not directly invested into infrastructure sector as such, but we went with the infrastructure play in Heidelberg Cement and Polycab India, as well as the third one was KEI Industries, which is which manufactures for the infrastructure sector.
Great. So instead of selling it to instead of investing in infra, we would like to invest in companies that are feeding the infrastructure companies. Probably, I think that's what Karan is trying to say. Makes sense to me as well, because probably making a cable has more ROE than making a bridge, or making a cable has more ROE than making a huge building, or having a huge building infrastructure. Thank you. Dipanshu is asking any battery stocks that can be added to this list. I think 34 is a huge number to manage, Dipanshu, if executed. So I don't know, Sahil, any battery stocks that you eliminated simply because of some reason, or no battery stocks could get into any of the parameters?
I'm not sure if I came up with any battery stocks while evaluation, but if at all it came up, they didn't qualify. And also, like Emmanuel Sir said, there are 34 stocks. If we are trying to achieve diversification and we are trying to lower our risk exposure, we need at least 25 to 30 stocks. We already have 34 stocks. We if we want, like we have added in idea segment, we have added some stocks we feel will go ahead and give a lot of returns in the future. We can also add Excite in that, but otherwise it is not qualifying anywhere.
Great. Thank you so much. I think there is a question that's again here about Franklin Mutual Fund. Atul sir, I would like to dodge this question to you. Any, I know it's off the topic, but the question is again repeatedly asked. So for the benefit of the person who's asking, any update we have on Franklin Liquid Fund?
So the last update was some of the large size investors, they have gone to SEBI and started filing court cases against Franklin Templeton management. I think that happened in the month of November. Some large size family trust who had invested a lot of money. And these are heavyweight people I'm talking about. So that is the last update, that they have taken it to court. Now what will come out of it, we'll have to see. You're on mute.
Sir.
Emmanuel.
Thank you. So, ma'am, currently the update is that they're still with regulators. There is no concrete decision that has been taken. If we do come across anything, we'll get back to you. Thank you so much. And sorry if your money is stuck there, but it's capital markets and things like that keep happening. That is why we diversify, and that is why you see you have 34 stocks here and not one. Okay, so finally, a couple of more questions. Any stocks from specialty chemicals? I guess we already have some specialty chemicals here, Sahil. But any stocks apart from the ones that you have in the portfolio in specialty chemicals that you came across and you thought, oh, this should be in portfolio, but we are not able to accommodate?
No, I don't think so. I will have to research more on that, but as far I don't think so.
Great. Okay. So, but as of now, we have a couple of stocks in the portfolio, so we can go ahead and see that. And what is the take on electric car making accessories company or electric charging companies, as electric car is future? Guys, it is the future, but trust me, there are very few players who are being able to tap the future of electric cars or EVs, and companies that are going to will be the companies that are currently in the market. So we're looking at battery operators, cable manufacturing, battery manufacturing companies, and Tata Motors, of course, because it's one of the pioneers in EVs. Though I don't think it's a part of this portfolio, but yes, EV is a next big thing, but I think we're too nascent in a stage to understand of which companies will actually benefit out of that. But of course, a tire is going to be one sector that is going to stay same, irrespective whether a car is a direct combustion engine or an electric car. It's still going to run on the same rubber tire for sure. So if you are bullish on auto, I think tire is a safer bet to make. But please make sure that you're doing the due diligence well in time, both on qualitative and quantitative terms. I see no other questions in the box. Any other questions, guys? If there is someone who could not chat, who could not type it in the chat box and wants to unmute and ask, please.
No, I have one question. Anshika this side.
Yeah, Anshika, please go ahead.
So, as per my analysis, ITC has stand on all the parameters of value analysis. But why it is in the growth one? I mean, why can't we put it into the value thing?
Sahil, over to you.
Uh, yeah, it was in the value analysis. Try changing the return requirement, rate requirement, and lower the rate requirement and growth. It will move ahead. It will become overvalued right now. I also invested in ITC in August. At that time, it was value investing only, and around November or November end, I pulled out. And after that, when I changed the according to the current scenario, I changed the rate requirement and growth requirements. It fell into growth investing only. Currently, I think it is trading more than 200, 210, around 210.
217.
217. Okay. So the intrinsic value was coming lower. So that's why it is in growth stock only.
Yeah, so Anshika, Sahil has tweaked the rate and growth factors while doing the DCF for ITC. So for all the companies, so you will have to connect with him offline to understand why has his rate changed and why he has changed the growth
Okay,
percentage.
sir.
So
I'll connect with him.
yeah, please connect with them offline, because there are a lot of stocks that I think were value, but Sahil has just told that they're not
Yeah.
no longer because of the rate and growth change that he has done. And trust me, we will have to change rate and growth as per the current micro and macroeconomic conditions every quarter. Otherwise, like you and me, people are stuck with stocks in their list as value, and suddenly someone like Sahil can come and tell you that it's no longer a value stock, right? So we will have to keep updating ourselves of the current rate and growth factors every
Sir,
quarter.
so this rate changes on quarterly basis. I mean,
Yes,
the
rate
rate.
and growth changes quarterly basis because of a lot of economical factors, including monetary policies, non-monetary policies, inflation policies, and all those other things. So that is where rate and growth come into the picture.
Okay, okay, okay. Thank you.
And again, Harini is asking whether we have any stocks in steel and metal sector. I think uh, the current valuation for all the metal stocks are off the roof, and the earnings are not that great. Also, the margins are not that stable. I think it's a very good traders area. I think metals and steel is a very good traders area as of now. But as an investor, I think I'll get roasted if I enter at current valuations. Atul sir, any update, anything that you would like to reflect on steel and metal sector? Because I'm sure from the investing point of view, it is not making sense as valuations.
No, these are actually trader stock, you rightly said. Uh, they have not given good return to investors for many years. And suddenly, because of the COVID lockdown open up and all the backlog buying and production has started happening, because of which metal stocks are going up. But this going up cycle is going to be for a very, very limited time.
Yeah.
I don't think it's sustainable.
Yeah. So Harini, please do not chase the valuation. I think someone can get trapped. So make sure that it's from the trader's perspective and not from the investor's perspective. And guys, this portfolio was purely made from an investor's perspective. So there are a lot of stocks that we do not have that are good trading stocks, but we do not have in this list because it's a pure investor's portfolio. Well, I see there are no further questions. So I assume all the questions have been addressed, and we've spent decent 1 hour discussing the entire portfolio. And while I was about to wrap up, I think there is someone just thanking. Great. So I think that's it from Sahil, Karan, and me. I have spent very little time for this portfolio, and I think Karan and Sahil have really worked very hard for the last 1 week to put together the entire. Trust me, putting a portfolio is easier than presenting one, right? We could have just created this portfolio and deployed our capital, but they've really taken a lot of pain and a lot of time to be able to present it to all of you guys, and I hope it has helped a lot of you. Any opening or closing statements from any one of you, and any feedback, we're open to you guys. Atul sir, Virender sir, Isha, anything from your end, please.
No, I think excellent presentation. I mean, a lot of work must have gone into producing a bouquet of 34 stocks. Evaluating a single stock itself takes a lot of time and commitment. So, absolutely excellent presentation. Thank you, guys.
Thank you, sir.
Thank you, sir.
Yeah, I think hats off to the efforts that both of them have put in. Apart from managing their own portfolio and preparing this model portfolio to be presented for others is a great effort. Thank you.
Thank you.
Great. Thank you so much, everyone. And this presentation would be live, would be shared on YouTube. So for those of us who have missed a part of it, or for those of us who would want to come back and refer to, it will be on YouTube, and we'll also be sharing email IDs of Karan and Sahil and me. If in case any queries, you can directly shoot them to us. Thank you so much. See you next week with another wonderful presentation from Together Investing Club. Thank you so much. Take care.
Thank you, everyone.